is inflation here to stay? Or do you think this is, we're going to get into, once we finally prick inflation here and it comes down to 2%, 1%, we're going to solve this and get back to where we were?
Well, I think a lot of the sort of core structural dynamics that were persistent over the course of the sort of 40 years before COVID that drove disinflationary pressures are mostly gone. And you touch on a few of them. We basically went from a period of not particularly well globally integrated to very globally integrated, and China entering the WTO being a big part of that. We went from a period where we had a billion people working on the farm, and now they have moved into the factory, and that's massively increased, across Asia, and that's massively increased their productive capacity. We had a period, I think probably doesn't get talked about enough, of an unusual period of peace globally. If you looked at, for instance, the amount of the loss of life in global conflicts over the course of the previous 40 years before the Russia-Ukraine conflict, it was basically at 1,000-year lows. And so that's the sort of thing that you wouldn't necessarily expect to persist. And I think that there's certainly indications that it is not going to persist on a forward-looking basis. And war is inflationary structurally. Peace is disinflationary. War is inflationary, both because of the destruction of material involved with it, but also because it creates a pullback of globalization, trade, all the big disinflationary pressures that exist. And I think more structurally, a lot of the deep-seated disinflationary forces that existed in the U.S. economy that really created that risk of deflation in the post-GFC period have mostly been resolved, in the sense of, household balance sheets are in fantastic shape. 15 years ago, they were in terrible shape. Business balance sheets are in generally in great shape, particularly big business balance sheets are in great shape. They were in real trouble 15 years ago. And so that confluence of things, deglobalization, increased conflict, the resolution essentially of the deleveraging dynamic and the debt overhang in the post-GFC period, all of that points to higher inflation ahead rather than lower inflation ahead relative to what we experienced pre-COVID. I think the main question, I should say, is the Fed basically has one tool to resolve that issue, which is to constrain domestic nominal demand. So if we're in a period where where inflationary pressures are persistent, then the question is, do they respond to that by reducing domestic nominal demand in order to contain inflation, or do they choose not to respond to that and essentially allow inflation to run hot for an extended period of time? That's a big question that has yet to be resolved. And I think, each day we sort of incrementally learn a bit of information about it. But I think that's the real outstanding question, because if we're in an environment where not only do we have those higher inflationary pressures, but the Fed is accommodating to those higher inflationary pressures, that's going to be a very different long-term macroeconomic environment than we've seen in the last couple of decades.
I couldn't agree more with that last comment. That's the big question still. The Fed has yet to come out and say they're okay with that. I don't know that they ever will, just because, whether they believe that or not, just because if they do, then they lose control of the long end of the curve, and that makes inflation worse.